What's going on, guys? Welcome back to the YouTube channel. My name is Jason, and in today's video, I'll be going over whether or not you should buy stocks now or wait until the stock market crashes further. But before I jump into all of that, let's go over what's been going on in the market in the last couple of weeks. Now, a lot of people are holding on to cash or they've already withdrawn from the stock market and waiting for the market to hit its bottom. And here's why I think the market has kind of bottomed out in a way. So if you compare this crash with the 2008-2009 crash and what happened back then, you'll notice back then there was a prolonged decline. And compared to the one that we're in right now, it was kind of a sudden move down in the markets. And while the markets were dropping massively, there was all sorts of news coming out pretty much every hour. So I believe the majority of the negativity around this situation has already built into the stock market. But that does not mean it can go down further. And the reason it could go down further, or it may go down further, and if there's massive negative news that comes out of nowhere. And in the last couple of days, you've probably noticed a massive increase in the unemployment rate. And that was one thing that people already knew, in which it was gonna increase like crazy. Also, there have been reports that came out for the GDP that's gonna be really bad, and along with what kind of profits companies are looking to receive within the next year or so. And having been known all of this information, the market still actually increased by a little bit. Now, that doesn't mean the market's gonna go back to where it was before the crash happened. And if you take a look at how the economy was back then compared to now, it's totally different. Because back in 2008, 2009, at least businesses were still open and making money. It's just that people were kind of scared to go and spend money. And compare that to what's going on now. People have money, they wanna go out, they wanna spend it, but pretty much the whole world is on lockdown. So businesses around the world right now are earning $0 unless they have other ways of generating a profit like online or takeout for restaurants. And still, it's nothing compared to what they would be making if it was open. So now let's get into why it'll actually be a good time to put your money into the market and why it actually wouldn't be. So if you've gathered up a good amount of money to start investing into the markets, and also with the money that you have saved up, think of it that you can't take the money back out or use it for something else for like another year or so, or until everything just settles down. And if you're young and you have money saved up and you're looking to invest it into the markets, now would be the perfect time because you have something that someone that's older wouldn't, which is time. Now keep in mind, rather than investing a large amount of money all at once, instead break it into portions and average it out with dollar cost averaging. And like we've seen in the past couple of weeks, stock prices have actually hit 52-week lows. So if you've been waiting to pick up the right stock at the right price, I believe now would be the right time to do that. Now on the flip side, if you're a bit older and you still have a lot of money saved up and you want to put it into the markets, then you would definitely need to use a different strategy in order for you to still protect yourself. You can do something like break it into portions, but you can use some of the money that you've saved up rather than using all of it, just so that you have some cash laying around just in case. And some people may argue that the stock market will actually fall even further. Now, of course, it can fall further, it can maybe go up. Nobody really knows what's going to happen. But then again, these are the same people that were like, I wish the stock would have came down to like its 52-week low. And in the last couple of weeks, some of the stocks have actually hit their 52-week low. So there's never winning. You never know what's gonna happen in the stock market. This is why you should always protect yourself and the hard-earned money that you've saved up. But I strongly believe just like any other recession or a dip in the stock market, it always tends to go up over the long run. So yes, right now it may seem like the worst time to go into the markets, but it can actually also be a really good time because you don't want to be that person 10, 20, 30 years down the road and looking back at this situation that we're in right now and kicking yourself and saying, I wish I put money in back then. And because of the markets dipping very quickly when all of this started, and if you compare that to the 2008-2009 crash and how the markets recovered from then, and you compare it to the one now, I personally think the markets will slowly start showing an uptrend within a couple of months, if not a little bit longer. I'm saying that because all of the negativity and all of the bad news has already kind of been built into the stock prices. And another thing that you can do if you don't want to invest in individual stocks is that you can look into either mutual funds, index funds, or ETFs. And this would help you mitigate some of the risk compared to if you were to go and pick individual stocks. Now, by all means, if you want to pick individual stocks, go ahead, but make sure you do your research and make sure you're picking the right stocks. And with that being said, guys, I hope you enjoyed today's video. And if you did, be sure to give it a thumbs up. And also, don't forget to subscribe for future videos. And leave a comment below and let me know how you're investing in this market. And with that being said, I'll see you on the next one, guys.